Hello.
Hello. I'm
So,
backstage. I was backstage.
oh, you were. Yes, I just saw it. So, I just went live. We are live. So we're
Amazing.
live. We're being candid right now. And hi, everybody. For those who don't know, I'm Dennis. That's Mark. We are Blue Compass Partners, and we're coming here to just share some information. And how are you, Mark?
I'm great. I just woke up. I'm sitting in Bali. I'm about to order a coffee to be ready to rock and roll.
Awesome. While he's ordering his coffee, what I wanted to share was a little story about how Mark and I met. And so Mark is in Bali, but I am in Playa del Carmen. And about 3 years ago now, Mark was here in Playa del Carmen, and we met in Starbucks because I used to go work there. Well, I still do sometimes, but I was at a different one. And Mark was there. We started talking, and and then we talked a little about what he does, what I do, and everything. And then we saw each other around town. Our girlfriends were playing tennis and doing all these things. And then we saw each other in Starbucks again. And I was talking to him about how I've gone in throughout my life in different phases, just like all of us as we go through life. And I've had a lot of successes, a lot of failures. But one thing I was never good at was finance and investing. And I was like, I could really use your help. And he's like, I agree. He's like, I think, I lost like 20 grand doing crypto investing. And Mark was like, you really need to stop that because that's kind of like gambling. You could do that sometimes depending on your position and your financial situation, but that's really just gambling. So he started teaching me about 2.5 years ago about value investing. And we were like, wow, we were both incredibly blessed in our lives. And we're like, we need to share this with people. And so Mark was like, I think we need to start an education program. But before I do that, what I want to do is I want to try to share my screen because I'm going to show you just so you know, everybody. Um, let's see, I'm going to share my screen. And this was when Mark and I, about 2 years ago, here at Playa del Carmen, we decided to start Blue Compass Partners and bring investing, value investing, and real wealth information to the world. And so that's how our partnership formed. And I wanted to share that story with everybody so you have a better idea of where we come from. So, that being said, I want to remove that and I'm going to say hi to Mark. And I'm going to kind of turn it over to Mark because I'm the business marketing guy. Mark is the financial guru that I like to call him, and he's humble. So he doesn't always talk about it that way, but it's true. So
Yeah, it's
there you
good. Thank you so much, Dennis. It's good to be humble. So thank you guys for being here. Thank you for having the opportunity to speak to you guys. So I would like to start off with an idea. Thank you. That my mentor um, presented to me 15 years ago. And what he pretty much said was that money is a doubling game, right? He was saying money is a doubling game. And if you, Mark, if you're not able to learn how to make double digit returns, high double digit returns, you're not even participating in the game. That's pretty much what he told me. And the reason for it is there's something that would be the first thing I hopefully can teach to you guys is there's something called the rule of 72, all right? 72. And it means pretty much that you take 72 and you divide the rate of return you are able to make in the stock market, right? So let's say, just as an example, in investing, there are no guarantees and we don't give any financial advice whatsoever. But let's say you're able to learn how to make a 20% return in the stock market. Yeah, that's something you target and you're able to create. Not consistently every year, but that's what you target, right? Per year. So you take 72 and you divide it by 20, okay? Which approximately is 3. Meaning every 3 years, you double your assets, okay? Every 3 years, you double your assets. Okay, so what does that mean? Why is this so powerful? Einstein called this the eighth wonder of the world, compounding. And it's really the secret of the wealthy. Yeah. The wealthy use it when they're born. The educated know it, and the ignorant, they just don't know. Right. And why it's so powerful, let's go through the numbers, right? Let's say, Dennis was talking about crypto and, investing 20%, $20,000 in crypto and pretty much losing it. So let's say this person would take the same $20,000 and just double it with this style of investing where he's targeting 20%, let's say, yeah? So that's a double in every 3 years. Let's say he's doing this for the next 30 years, right? So 30 divided by 3 is 10, meaning 10 doubles, right? So he's starting out with 20, so it's 40, 80,000, 160,000, let's say 300,000, let's say 500,000, 1 million, 2 million, 4 million, 8 million, 60 million. And that's the magic. And for most of you guys who kind of heard about the compounding effect, this is not something new, but I would argue that most people you talk to, they are not using the compounding effect for their own finances, right? So this is really what I'm about. This is really what Dennis is about. And my mentor always used to say, and it's actually a quote from Charlie Munger. He's saying, take a simple idea and take it serious. Okay. And that's the simple idea. Buffett started when he was at 11. I think by 11, he read every book in the Omaha library where he was from that it was about investing. He started compounding and is still going strong, 94, 95 years old, right? And there's even an astonishing um, graph that shows that he made something like 90% of his wealth after the age of 50. And why is this the case? Because at the beginning, and that's why in my opinion, not more people are doing it. At the beginning, it grows boring and slowly like grass and very unsexy. And then after a while, the compounding effect gets this hockey stick where it's just exploding, right? And most people don't have the patience to get the compounding going. Okay, great. Okay, so this as a start, this was the first idea he pretty much planted in my mind. And after that, I had really hard times to go to sleep, right? So, okay, that was the first idea. The second idea is pretty much a question. Yeah, we think in questions. So the question would be, okay, fine, Warren Buffett, and the Warren Buffett strategy. Where do we even start? Okay, and here's the key. The whole process of what Dennis and I are doing is pretty much in 4 steps, right? There's the language that you have to learn. Investing is a language by itself. There is a checklist, a checklist with 200 questions that we go through for every company, right? And what we pretty much do is we're trying to build a portfolio of 10 companies we know inside out, okay? We know everything about this company. Most people, they, you know, in investing, they try to be smart or they try to know everything. That's not the goal here. The goal is pretty much you want 10 companies that act like a steward of your capital. And then you know everything inside out about those 10 companies. And once you accomplish that, what we are doing with the checklist of 200 questions, you're done. Okay. So it requires upfront work, but once you've done it, it becomes a very hands-off kind of situation. Okay. So how do we go about that? Okay. And the if you simplify it, there's 4 steps for the analysis of 200 questions. To simplify it, there's 4 steps. And the first one is circle of competence. Circle of competence. You might want to jot this down. So the first exercise I did with Dennis was pretty much to find out where is his circle of competence. Okay. And I asked him to jot down 3 circles that overlap each other in a certain spot. And those 3 circles is passion, money, and talent. Okay. So why did I do this? Because Dennis' circle of competence is a different one than mine and probably the person sitting next to me. Okay. Let's say this person is into online marketing, right? They spend money there, they have talent there, and they're probably passionate about it as well. Okay. Because hopefully it's their work. So they might understand something about Alphabet and Google ads, for example, or Facebook ads, or the whole industry of online advertising. They understand. Okay. And that's the starting point. It's not so important to follow trends. It's more important to be very comfortable in spots and pockets you understand, right? My mentor always told me it's important to be an inch wide and a mile deep, right? And there's friends of mine that are, you know, experts in a particular industry and they're making a killing because they stay smart in pockets they understand. So the first level, the first pillar is circle of competence, right? Second pillar, second step, we want to have a company that has such a strong competitive advantage that it's very difficult for competitors to invade their castle. This analogy is from Warren Buffett. He's calling this a moat. Imagine there's a big moat around a castle with piranhas in it, and capitalism is brutal, where, you know, everybody's competing for profits. So you want characteristics of the business that protect it from competition, some competitive advantage, right? Some companies have a moat, some companies have a brand moat, some companies have a switching mode where it's really hard to switch from one product to another. So it's just a competitive advantage, so you understand. The third step is we want a management team that is very talented, and secondly, that has high integrity, right? We want the people, the management team is pretty much the people that should act in the interest of the shareholders, the owners, which is the person who's buying the stock, right? If you buy a stock, it's the job of the management team to make smart decisions to increase the profits, for example, right? So this is what we mean by talented. And the second thing is integrity. And integrity is pretty much doing the right thing, even though they maybe don't feel like it, or they have self-interest conflicts or something like this. They act correctly in the interest of the shareholders, which is you if you buy the stock. And step number 4 is margin of safety, which means we want metaphorically to buy the stock, the dollar, for a discount. We want to buy the dollar for 50 cents. Okay? And I'm using a metaphor here intentionally, right? What we pretty much trying to do all the time is to buy the dollar for 50 cents. We're actually trying to buy the dollar for 50 cents. Okay. And why do we do that? First of all, if one for the rest of their life is buying the dollar for 50 cents, you cannot help it but to get wealthy. That's reason number 1. Okay. Reason number 2 is the most important rule in this Buffett style of investing is what he also calls rule number 1, which is never lose money. Never lose money. Okay. And rule number 2 is never forget rule number 1. Okay. Okay. Why are we so obsessed with this rule? Because investing is, I'm afraid to say it like this, but it is risky. You could lose. Okay. And the error rate, even the best investors who do this game, this Buffett style of investing, are wrong 50% of their time with their estimations. Let that sink in. 50% of the time they are wrong. Okay. But because they are buying or they're trying to buy the dollar for 50 cents, they have a huge margin of safety. Meaning, if something goes off and they're wrong 50% of the time, they are not violating rule number 1. Right? They are not violating rule number 1, which is never lose money. Okay? So, what we investors with this Buffett style of investing are trying to do is we're trying to foresee the future. And that's a really hard game to play. And with the checklist of 200 questions and with, going through the companies and learning the language and really understanding the business, which requires work, you start to get a feeling of the company. And then you're trying to predict the next 10 years. How's the business going to look like, right? How's the revenue going to look like? How the profits going to look like? And from that, okay, we are making our estimations when it's a really good time to buy the stock. Okay, when the price is right. Okay. And all of this, at the end of the day, is such a hard game that we have to install a margin of safety in case we are wrong. So we don't violate rule number 1. Okay. So that's pretty much how it is, right? You start the game of compounding for yourself. And then when we start analyzing to a stock, we go through the 4 stages of circle of competence, making sure the company has a moat that protects it from competitors, having a management team in place with integrity and capabilities, and buying the company with a margin of safety that even if we are wrong, we don't violate rule number 1. Okay? Great. Okay. So that's pretty much the steps. Okay. The next thing I would like to go over is we are personally micro investors, meaning like I said, we are trying to find 10 companies we understand where we're able to fill out the checklist of 200 questions so we can predict how the company is going to look like in a decade's time. Yeah? It's called in our world micro investors because you zero in on one particular company. Yeah? There's also macro investors, right? There's a notion out there at the moment where people, there's two ways of playing this, right? There's either the decision that I made and Dennis made years ago, where we were like, we want to master finances. Okay, we want to understand how this is done, and we want to pretty much, be captains of our own destiny, so to speak. Yeah. There's another way that's very famous out there, and this is called dollar cost averaging into an index. Okay, and that's also a, a perfect second option and solution to play this game. What this pretty much means is people dollar cost average means they save and invest on a monthly basis or quarterly basis or yearly basis, always in an index, like for example the S&P 500, which is our biggest 500 companies in the United States of America, and they just buy the right. They buy all the companies in there, and they don't pay attention to price. Okay, and the reason we believe this is a really challenging time to do that is the markets are at an all-time high. Okay, and when the markets fall, let's say 30, 40, 50%, then the whole index would fall, and people who start investing at all-time highs, they would lose. Okay, so experts, they think that when it will happen, there's going to be a huge sell-off because 50% of the money that is invested at the moment is invested passively through those index funds, right? And if people don't have a sense of what they own and the market crashes, they will get fearful and just sell off everything they own because they're afraid of losing their retirement money. Okay. So experts, the people we follow like 20 people that follow that Warren Buffett approach. There are 50 billionaires, investors that just followed Warren Buffett and became very wealthy themselves. And we pay attention to them. And they argue that. And there's one macro investor who's the biggest hedge fund manager on the planet, and his name is Ray Dalio. They call him the Leonardo da Vinci of macroeconomics. Macro is like geopolitical things and yeah, the bigger picture. Really hard game to play. I'm not smart enough to play, so we're not even trying to participate. And he wrote a book, and it's called The Changing World Order. And he wrote another book. It's called Principles. And in those books, he describes that the market goes in cycles. Yeah, in cycles. And there's always a winter coming. And usually he studied the pattern. Every 7 to 12 years, there's a winter. Okay. And the winter has not arrived for 14 years as of today. Okay. And what we believe, there's no recommendation, no stock recommendation whatsoever, is well, the winter is 14 years ago. There was no real recession yet. You have at the moment wars out there. There's more wars than any time in history. You have this also explained in his book. You have China on the rise. You have the US on the decline, and those intersections are pretty much always followed by uncertainty or a war. So there's a lot of uncertainty at the moment. We're in the 14th year of a bull market. The central banks are printing money like crazy. 70% of all the dollars have been printed after COVID, right? So what we believe, and again, no stock recommendation, is that what goes up must come down eventually, right? And we believe that this is not sustainable, right? And what we are preparing for pretty much is another 2008, 2009. You know, the financial crisis happened, the market crashed, and if somebody, you know, is building up cash, and an opportunity like a financial crisis 2.0 is happening, and this person is prepared with a watch list of wonderful companies he or she understands at a discounted price, then we believe this could be an opportunity of a lifetime that pretty much sets somebody up for generations. And those opportunities don't come along often in a lifetime. And yeah, that's pretty much what we are preparing for. Um, and along the way, we are, you know, sharing our information, our teachings with people who are eager to learn and to, yeah, who are up to take advantage of this opportunity as well. Yeah.
Amazing. Yeah, no, that was amazing explanation. Of course, that's what attracted me to you in the first place a couple of years ago. And you know, a couple of things I wanted to see if we can go through it a little deeper. One was, as you were talking about the market, you mentioned the S&P 500. While you were doing that, I did a Google search, which was basically the AI search, and I said, what is the average percentage of growth in the S&P 500 over 20 years? And it's 10%. And that is total. So most people who invest in those index funds are not doing it themselves. They're using a broker. So that 10% goes to fees. Some of that 10% also goes to fees and maintenance. And then actually 10%, I believe, is also high for the final rate of return. And that's assuming you keep your money in there the whole time. Like you said, people panic and they take their money out.
Yeah. The reason, sorry, the reason I like, again, we are going to read, like, you know, we, we don't, Dennis and I don't and investing not, and not give people certainty about financial advice. We know financial advisors. So what I'm trying to say is there's certain things we can say and certain things we cannot say. And for people who are eager out there, want to market, it's possible, but again, there are.
There's no
Sorry.
guarantees. No, yeah, no, yeah, we're not giving advice at all. And there's no guarantees. But the reason I brought that up, the main reason is that the inflation pretty much sucks up all of that return anyway. So it's really, it's a tough game to play. And then, so the way that we work with value investing is really, it's really the most intelligent way to approach it, but it's boring. It's not as exciting as, like, you know, doing all these new tools, AI tools, and scalping the market and doing all these fun. They've kind of gamified investing, but they've also increased your risk. And it's a tough game. People like to play those games. It trips off dopamine, just like social media and everything. But it's kind of a dangerous game to play. Is basically what we're talking about here.
Yeah, and there's a quote by Charlie. Why should it get rich? And it's pretty much, and I believe in, and I'm sure a lot of people can agree with. There's three things I believe you should master: it's your health, your relationship, and it's your finance. And finance is something, and once you dialogue, you see the results, and that kind of gets you going. And second thing is, once you have this, you can pass it on to the next generation, and it's really something. After 30 years, it's not over. It's made. I'm gonna do. I'm sure that I'm not here, and then it's so much money. Yeah. Once, once once you make to this area of life, find out this is important to take care of, because money is a tool, and if you don't fix that you have this tool available in abundance, it's going to affect every other area of life, and that's just how it is. So yeah.
Yes, finance, romance, and health. Those are the three areas to master. And I've gone through quite a bit of financial stress in my life too, and I think most people have. I think it's like a season of life that most of us go through. But if you can manage that, it removes an enormous amount of stress. Money doesn't buy happiness, but it provides freedom, and that leads to happiness. And there's always other stressors in your life, but if you can find a way to manage this better, it makes life lighter, is what I should say. So we were kind of given a very high level overview, and what I would like to share is that one of the reasons we're doing this is because we want to go deeper on this with hold on a second. I need to share my screen again, and hold on, add to stage. So what I want to do is we want to go a little deeper on all of this with you. And let's see. Are you seeing the
Yes.
Wealth Blueprint Masterclass, Mark?
Mm-hmm.
Yeah. So what I wanted to talk about here is what we're offering, because what we did here, and it's impossible to describe everything that we do to make this really effective in a 30-minute live session. And what we want to do is we want to go a little deeper. Like, our goal is to help as many people as possible relieve that burden and start to learn how to become independently wealthy. And so what we're doing is a class that we usually charge significantly more for 3 days live. We're going to go much deeper on all of this. What is a margin of safety? How do we determine what that is? We're going to dive into a company and show you how we do that. We're going to break down those 200 questions that Mark was talking about, and show you how we actually pull this off, and then determine what the intrinsic value of a company is, which helps us determine what that margin of safety price is. And so what Mark's talking about is that we do this with 10 or 20 or 30 companies that inside and out, and then you wait for those companies to be at a fair price, and you continue to do that over the course of years. And so we're going to teach you exactly how to do that in a 3-day masterclass. And because we want to help as many people as possible, we're doing it for the next 48 hours. We're going to do this at $400 because we want to make it affordable for everybody to get in here. And the virtual workshop class is in this link right here. I'm going to share it with you after. I'm going to share it on LinkedIn. Right now, we're live on LinkedIn, Substack, and Facebook. So I'm going to share this in a follow-up message for all the people that registered. You're going to get this email follow-up, and you'll get the link to this where you can register and secure your spot. And we're going to go much deeper on this. It's going to all make a lot more sense, but you're going to learn how to grow wealth without having to depend on Wall Street or brokers or any of those investment vehicles that really kind of keep you stuck and don't get you where you want to go. And at the end of this, you should have a pretty good idea how everything works and what your next step should be. So does anybody have any questions or comments or concerns? Mark, do you have any closing arguments before we lock this up?
No, I'm excited for. I think at the beginning I didn't tell the audience so much about me. I used to, when I was in college, help people, um, help inner city kids with math as a bridge so they can go to university. And this was kind of like I think the most fulfilling job I ever had. And why am I saying this? I'm really passionate. We are really passionate about helping people, you know. And I have a client at the moment. He's from Germany, and he's very unhappy with his current life situation. He feels trapped. He wants to get out of Germany. He's not enjoying the work that he's doing. And to make a long story short, it's really fulfilling for me to, you know, to make a difference in the sense where I'm able to change people's lives. And I know Dennis is the same. So I'm very passionate about this. I'm excited. So thank you, Dennis, for setting up.
Yeah, and thank you too, Mark, for sharing. I know you're a busy guy and you are in demand, and but you're somebody that people need to learn more from. And I've learned so much from you, and I think that this is such a great vehicle to bring this to a lot more people. And so once again, keep an eye out in your email. We're going to send this. You should be getting it in the next maybe 12 to 18 hours. You'll get an email with the link to register for the event. And I encourage you to take advantage of that. If you have any questions, please email me or direct message me on Facebook, LinkedIn, or Substack. And we'll be in touch soon. Thank you so much, Mark, for your time. I appreciate it.
Thank you, guys.
All right. And thank you, everybody. Have a beautiful day. We'll talk to you soon. Bye.